Lagarde said, oh, that's just temporarily and we will not go higher. Keep calm down, everything will be good. Today we're at 10%. So we Hello and welcome, Catching Secrets Insiders. This is Joachim and Bernie, live from Catching Secrets on our weekly catching up. Today we have awesome content for you. We will let you know about business cycles and how you can make profits by knowing what is a business cycle and where are we in and how can it help us. Then we will talk about the biggest transfer of wealth in history and how you can be part of that. And yeah, let's dive in right into the topic. Joachim, anything from your side?
Let's go. I'm ready to share this. So let's get people bring them the opportunities so you can start making an income from investments and building that portfolio that's going to be able to create a life that you're really looking for. So let's go, Bernie.
Awesome. So first of all, let's have a quick look up in what's going on in the financial world. I'm giving you a short news overview, then we're diving into the business cycles. Then we're going into the crypto world, and to round it up for today, we are watching our pie at the end. So first, let's take a look into the news. Home prices surged to another record high in April. So what happened to this? Last week or 2 weeks ago, we were talking about the prices at first time dropped again by 18% in the luxury segment and by 5% in the non-luxury segment. And now we're seeing new highs. So the home prices are going even higher. Real estate is still on the rising. Although we have seen some weakness, how can we profit from that? So first of all, I personally would currently not invest into real estate because it's a bubble. It will burst at some point. And if you are at the top of the bubble and you just invest now and then you don't have more money available to invest, then you are basically fucked up, to say it in harsh words. So you need to be aware of the situation. If you can purchase 2, 3, 4 different real estate objects, then you could start investing, because then you get this cost average effect when you continue investing if it's going lower. But if not, then just hold your feet still and take other opportunities. So we are seeing now in the stocks world, we're seeing huge opportunities. And Cathie Wood, she is running a real huge fund and an investment company, and she's issuing ETFs, so-called ETFs. That means they are putting some companies into an instrument, into an asset that you can invest in, and then you can participate on several companies by just investing into one ETF. It's like the baskets we have in our pie challenge, but this basket is issued by Cathie Wood's company, and she said she believes we are already in a recession. And by the way, Cathie Wood just recently reported that her ARK fund, her ARK company invest fund, they have the biggest flow in of money since ever. So people are still investing and are participating or try to participate on everything, because currently we're really in a discount phase. So you can really buy cheap companies. Cheap is relative, but you can buy companies for good prices, and even if it's going lower, you're holding back some cash if you have a proper money and risk management, and then you can invest later on. So what else do we have on the agenda? Yeah, the very important topic, the European Union, Lagarde. So the European president, she says she's playing down the recession risks. She says the European Central Bank is ready to move faster on rates, on higher interest rates if needed. And as you know, 1 year ago, inflation started to go up. And the same person here, Lagarde, told us, calm down, recession will not go higher than 2%. 2 months later, in August 2021, the inflation was at 4%. Lagarde said, oh, that's just temporarily and we will not go higher. He calm down, everything will be good. Today we're at 10%. So we more than doubled. And now she's telling us we don't have a recession and we are ready to raise interest rates. So she wants to calm down everyone. Be aware of that. So be aware of that. They don't tell us. They will never tell us that everything is blowing up, everything is breaking down very soon, because then people are getting into panic mode, and they want to prevent that. But be aware that the situation that we are seeing currently is not as good. It's worse than they are telling us. And this is something we have to be aware of, because then we can handle the situation. So Joachim, anything from your side to add on that?
Yeah, so I'm thinking it might look worse as investors when we have a proven strategy, when you understand what's going on. And as Bernie said, when you have this awareness, that is the power when we can start taking advantage of this. You can take advantage of it in a way that's going to serve you and the people around you, because the only way to deal with what's going on with these economic uncertain times is actually to invest the money. So the money is going to work for us, because with higher prices, with increased interest rates, it means that, okay, you can either choose to work harder because you need more money to buy the same things. Like, so for the same amount of money, you could buy fewer things today compared to a year ago. So if you want to buy the same amount of things, you need to have more money. So then you can either work harder or you can work smarter. And working smarter now means having your money working for you and investing it. That is why you're tuning in here. So I'm happy you're here, because I know your time is valuable. So yeah, I'm glad that we get to dig into how we can get your money working for you.
Thanks for this. Yes. So let's dive in. Absolutely, can just confirm what Joachim said, and let's move on. I'm diving into the business cycle. So what is a business cycle, and why should we know about it? Because if you know about the business cycles, then you get again awareness of where are we currently. So where are we standing? What are we facing? And how can we handle the situation? And then awareness is the key to making the right decisions. So here on the screen, you are seeing right now the business cycle. What is a business cycle? I got this from thebalance.com. It's a website where you can find a lot of information about investing and basic stuff. So the business cycle consists basically of 4 main stages. The first stage is the expansion. Oops, let me put it into your view. First stage is the expansion phase. Expansion phase means everything is we are in a mood that is like if you're starting something. I'm getting excited about something is coming up, something new is coming up. And then this momentum is going on, expansion is starting off. Then we get to a peak. This is the point where the excitement gets a little bit lower, and where we are starting into the into the contraction. The third phase is the contraction phase. So the peak is where the excitement is the highest, where everyone was or is believing that everything is beautiful and everyone is making money and everything is going higher. That's something that we've seen before COVID. And then we have the trough. The trough is the point where everything basically breaks down. So it's going down. Everyone believes, oh my God, what's happening here? And this is the point of return, the point where it starts bouncing. And then we're heading again into the expansion phase. Who is determining what is a recession, where is the expansion, where is the contraction, where is the peak, and so on. So there are several key metrics that are discovered by the National Bureau of Economic Research, NBER, and they are taking some figures, for example, the quarterly GDP growth rates, and some monthly economic indicators like the employment rate, the real personal income, the industrial production rate, and the retail sales. And they are just taking all those figures, numbers, putting them together, and they're seeing where are we? So are we going higher? Are we going lower? And for example, a good rate for the growth is 2%, 2 to 3%. And if the economy is growing like that, 2 to 3%, then we can say we are in a healthy expansion phase. But if this is going higher, so if the growth rate is significantly going higher, it's likely that we're coming close to the peak. And then if it's going lower, then we're seeing the contraction phase, and it's really compared to history, if it's really at the bottom, it's likely that we are seeing the trough phase. So we have three factors that influence and cause each phase, which is the supply and demand. As we know, supply and demand is market. So if there is more supply than demand, the prices will fall. If there is more demand than supply, the prices will go higher. Then we have the availability of capital. So how much money is available, how much liquidity is there. And then we have the consumer and investor confidence, which is a metric that's really hard to determine, but they are figuring out ways of doing this. All right, so let's continue with, 2% growth rate is healthy. That also goes for inflation. So if inflation is growing by 2%, this is called a healthy growth rate. Few words about each of the phases. Contraction phase, what should you do? This is important for investors right now. Contraction phase, what should we do as investor? We wait for the rebound. We are holding a certain amount of cash. We are going in bonds and stocks. So if you're purchasing something, you are going in bonds and stocks. Then we come to the trough phase, so the bottom phase. There you buy commodities, gold, silver, oil, gas, and you buy stocks because companies are cheap. They have been going lower, and that's what we like. Then there comes the early expansion phase, where we are buying small cap stocks. That means stocks of small companies that have a small market capitalization. So, for example, Apple has a huge market capitalization, and small companies just have a small money that is traded for over them, small liquidity. Then we have the high yield bonds, foreign high yield bonds, so non-US high bonds, which are also called junk bonds. So they have a high risk, but as we're in expansion phase, the risk-reward chance ratio is very good. So this is the point where we could buy junk bonds. Then we have the late expansion phase, where it's time to buy mid and large cap stocks like Apple, like Amazon, like Microsoft, like all the big players. We can buy those. And then we have the peak, where we have to sell the stocks, sell the commodities, sell the junk bonds. We are increasing our cash amount. We are buying into short-term bond funds. we are buying into money market funds, and we're buying into gold and commodities like silver. So that's basically it. How we should handle the markets, each phase of the market cycle, of the business cycle, and how we can benefit from that. I hope you liked it. If you want to learn more about it, we are going much more in detail on all this in our programs, and we are doing also coachings. So if you like to learn more about it, just drop a comment below, and we will contact you. Joachim, what's up in the crypto world? Let's move to the cryptos.
Yes, let's have a look. Basically, what you've been talking about, Bert, is what wealthy people have realized is that these movements in the financial world, with stocks, with crypto, with anything you can buy into that appreciates in value, assets, that is the key here, assets that will grow and appreciate in value by themselves. The wealthy people have realized that the prices of these assets, they go up and they come down, and they go up and they come down. As Bernie mentioned, it's different phases, and we are in a time where it could be an idea to at least have a look on what's possible. Now you got to do your own research as well. We only share our experience and what's working for us, and what our clients use as well to make profits over and over again. We have the same scenario in the world of cryptos. Prices been going heavily down, and there are so many great projects that could be bought at a big discount. For example, one opportunity is with, for example, Bitcoin. It's down a lot from the all-time high, which was back in early November last year up here, and now the price has fallen. So at the time of this recording, it's 70% down from the high. And there are many analysts out there talking about what's going to happen with Bitcoin. And there is an analytical platform, Quant, and they're talking about that Bitcoin will go even further down within the next 6 months, and we could see it as low as 14,000. That would be an additional, let's see, about another 30% drop from the current price. And then they forecast that for most of 2023, next year, price will be around 28 to 40,000. And then finally, in the year after, we will see much bigger traction. That is, the price will go back up. And listen to that. It means people see this as cycles as well. Prices come down and price will go back up, because what's happening is that most people, they are focusing on what is not working, and that it's a lot of fear, increased prices. And that means many people, they think that I'm not willing to invest in crypto now because I'm not sure how my economy is going to look like. However, if you know where you are at, if you know your economy, you can take control of it. Bernie, do you want to add anything before we move forward with this?
So basically, nothing to add. It's a great opportunity. Yeah, so one thing to add. Some people may think, oh, if it has lost 70%, I can lose just 30%. But you still could lose 100%. And I show you, I tell you why, because imagine you're investing right now. Right now, you can invest $100. If this is going down to 30%, then you can lose 30%, but you can lose even, or it can go down even more, 50% or something like that. But on the other hand, you can make a lot of profits, because if it goes back up where it was, you have maybe 140% or 200% in profits. So this is the risk-reward ratio that we are always watching, that we have a look on, and which is also helping us making decisions. Because if we have a good risk-reward ratio, like here, I mean, the risk is really calculatable. And if we have a great risk-reward ratio, we can make a great investment. And personally, I see it going down, maybe until 10 or 12,000, and then we will see a rebound latest, and then this is the time where we can go in a little bit with a little bit higher amounts. So that's it from my side.
So if price drops even further, as Bernie's talked about, that is actually great news, because it means you could get in at even lower prices to push your average price down. So let's say price would go down even further. It means, yeah, you can buy in again. That's one opportunity to actually get your average price lower. So as soon as price will go back up, and hopefully you've seen that this is cycles. Just have a look at the price historically. It goes up, it goes down, it goes back up. So if price comes down, when it goes back up, you just have an even bigger chance of making profits. Just make it even more simple for you to profit from it. So it's great news that the price goes up and down.
Life is cycles, so
yes,
everything in life is consisting of cycles, and it's going up, it's going down. And I always say my life is like a stock chart. Basically, it's I have my ups, I have my downs, but if I'm taking the big picture, it's all continuously going up and higher and higher. So everything in life is cycles.
That was it regarding crypto, Birdie. Let's share about the pie.
Good. So let me open up the pie. What is it telling us? I think not much has changed since last week. Yeah, we have still our holdings, so we don't change anything about this currently. Next week is investing time. I told you that 2 weeks ago we have done our last investments, and we said we will invest every 2 weeks. But our second requirement is that we are investing just in between the first 5 days of the month. And today is the 28th of June, which is too early. So we will invest next week. Next week will be our next investing round. And one thing I wanted to show you, if you are logging into your dashboard here, then you see the spell on the left. And this is giving you some notifications about what's going on. Sometimes it tells you that your funds have been invested, like 2 weeks ago. Sometimes they're telling you something about upcoming holidays. So the upcoming Monday, there will be, or it was the last Monday, no, the Monday 1 week before. This Monday was holidays, so there was no trading, no exchange was opened. Then we have the high volatility. CoinSyncs yesterday and today they talked about high volatility again, but the stock Oxy has made 16.4% in profits, and this is something you can click on that usually. It seems only on a mobile version. So if you want to know more about this Oxy here, then you just type into this go into this sign here, type in Oxy, and this is the ticker here, Oxy. Go into it. Occidental Petroleum. You get some insights into the company. What are they doing here? And then you can do some research. You have the key ratios. So if you want to dive deeper into this company, then you can do that right here. And we are also doing this in our program. So we are diving deeper into which numbers are important, so that you can really get a fast overview of a company. Is it a healthy company? Is it making money? Is it losing money? So that's very important to know for us as investors. Which companies can we trust? Which companies should we invest in? One thing that we can do today, if you like, we can have a look, because what we can do is we can rebalance. If I go to rebalance, that would mean, as you can see here now, Currently, I'm holding, for example, 18% of UFP, but I should hold 20%. So if I don't want to invest this week, for example, then I can, instead of that, I can rebalance my portfolio, which means I'm selling those companies, those assets here. I'm selling those that I'm holding too much of. So for example, Alpha Protec, I will sell my 0.5%, and I'm purchasing more to get it up to like 20%. So UFP, I will purchase UFP. And this is something that you can do every, I would say, I would also do that just frequently. So at a given interval, then you click on rebalance, confirm the rebalancing, and then everything is done for you. I don't do it right now because next week we're investing. Then the rebalancing takes automatically place. And that was it for this week from my side. So let's wrap it up for today. Thanks for tuning in. And if you have any questions, you know, there is a comment function below. Just drop it in here. We will be happy to answer your questions. Maybe one thing. Where are we in the, I've seen a question, where are we in the business cycle currently? I want to ask this question to you. Give us your guess. Where are we currently in the business cycle? Drop it into comments, and next week in the weekly catching up, we will tell you where we are in reality in the current business cycle. Good, that's it from my side. Joachim?
Let's do the catching move.
Let's do the catching move. See you next week.
Catching.
Bye-bye.
Please be aware, we are no financial advisors. We do not provide any advice. We only share our experience, and our results are not typical. If we mention any stocks, funds and other type of investments, it is for educational and illustrational purposes only. Most people are unable to achieve similar results to ours. If you want to achieve similar results, you have to commit yourself to systemize, to learn and to stick to the rules.